4 ways to save more on your mortgage in any economy. Point number 1 is splitting your loans. Okay, so this is called hedging your loans or splitting your loans. And so let's pretend that you've got a $300,000 mortgage, a pretty nice small mortgage by New Zealand standards. But let's say you've got a $300,000 mortgage. Now you could put that whole $300,000 on the cheapest rate, and at the moment the cheapest rate is the 1-year fixed. That's in the low 3%, and you might think, great, low 3%, let's put the whole $300,000 on the 1-year fix and take advantage of that low rate. Okay, this is a little bit dangerous. Okay, just be aware that what happens if that what happens if that rate goes up in a year's time and you've got 100% of your mortgage on 1-year fixed. What that means is that in a year's time, 100% of your loan is going to get affected by that higher interest rate, and bang, your repayments could jump up. Okay, so this is why I encourage people to split their loans. So an example of this could be putting 100,000 on 1-year fixed, another 100,000 on 2-year fix, and another 100,000 on 3-year fix. This way, if the rate does jump up in a year's time, at refix time, it's only going to affect a third of your mortgage. It's not going to affect the whole lot. You could do that also with, say, a 2-year split, which could be 150 on 1-year fix and 150 on 2-year fix. Okay. Now, there is ways of working out what's best for your situation and what would suit your profile best. So this is something that I encourage people to take advice on so that you can figure out what's the best structure for your situation. Number 2. Offsetting some of your mortgage. So pretty much all the banks in New Zealand have got some sort of offset or revolving credit type feature. There's different types from different banks, but this is, if you use one of these well, then you can actually offset some of your income, or you can offset some of your savings, or maybe some of the money that you use for bills to reduce the amount of interest that you pay on your mortgage. You do need to be careful with these because these are on the floating rate, and the floating rate is quite a bit higher. So there is a formula for working out how big your offset loan should be. You don't want it too big, because if it's too big, you pay too much interest. If it's too small, it's inefficient. Okay, so this is something that I encourage you to get proper advice around, because if you've got the right size offset or revolving credit type loan, you pay very little interest on that portion of your lending, which can save you quite a bit of money. Okay. Third one, paying extra. There's 2 ways to pay extra on your mortgage. One is you can increase your repayments, often fortnightly repayments, which is what I referred to earlier, or you can do lump sum payments, or you can do a mixture of the two of those 2 things. Okay, so the plans that we write teach people which one works best for their situation, because you do need to be careful with how you pay extra on your mortgage, because you don't want to leave yourself in a difficult situation if you get this wrong. Okay, but both these 2 things will certainly help you create more equity in your loan. Fourthly, and I think actually most importantly, is use specialists. And that's what we are at FutureBound. We are mortgage specialists, and we take a lot of pride, and we just love teaching people how to structure and pay their mortgage so that they can create equity really, really quickly and get rid of debt really, really quickly. We basically show you how to use the bank systems and the bank's products to your advantage, so that you can pay as little interest as possible and that you can pay off your mortgage in the fastest way possible.
For more financial tips, advice, and education, subscribe to us on YouTube, and don't forget to hit that notification bell.